Hey fellow dividend investors, Dennis here, and I'm going to go ahead and break down my full M1 Finance dividend investing portfolio. We're going to break down all the different stocks that I have, the different sectors, how this portfolio is doing, and kind of where I see it all going. So in this episode, we're going to look into every single holding into this so you can see exactly what we have. Obviously, this account is nicely named Dividend Dennis, and you can see we are currently at $17,363 thus far. Now, before we break down into this full account and take a look at everything, if you by chance are somebody who has some student loans and needs to potentially refinance because you got some really high interest rates, check out my friends here at Earnest. Link will be in the show notes down below. The really cool thing is it takes less than 2 minutes to figure out, what kind of rates you can get and potentially lower them. Now, the cool thing is if you lower them, you can actually get some more money to put into investments. So one, you help out support out the channel, and then two, using that link down below, like I mentioned, will give you a nice little bonus. Now, let's go ahead and get back into the portfolio here and take a look and see how we are currently doing. Like I said, we're at $17,636. You can see here for the last day as of this recording, we are up $49.78. Now, this is money weighted returns. Just in case you're not familiar with that, that just means that this encompasses any dividends earned, maybe any profits from stocks that I sold but kept that money in the portfolio. I will show you guys the unrealized gains here in just a moment. Now, we also have our last week has been pretty good. You can see here we are up $414. And then let's go ahead and jump over to the last month. We are at $954 in gains right over there. And if we go to the quarter, we're at $1,193, which is pretty stellar. And then let's go ahead and jump to the year and let's kind of see where we're sitting at right now. So for the year, we're sitting at $2,758. And for anybody who's sitting here and like, whoa, Dennis, that's a lot of money. I'm nowhere near that. I just always like to show people this. This was where I was a year ago. And I'm gonna show you where I was obviously in my all-time. So a year ago, back in November of 2019, I was at $937. And what I was doing was slowly getting steady and, investing a little bits at a time. And you can just see this chart going up over time on that because I was not interested in putting all my money in right away, especially as I was learning and trying to understand how I really wanted to structure this portfolio, which, like I said, we're going to go into and talk about here today. So let's actually go to the all tab right over here. So I'm at $2,826, by the way, for the all. And you can see here in January 23rd, 2019, I started out with $100 in this account. So what we're going to do is look at all the slices. These are all the different sectors essentially that I have in this portfolio. So we got tech, we got growth, financials, retail, real estate. I got one ETF, which in case you're not familiar with what this is a combination of a bunch of different stocks together, and we'll break that down here in just a little bit too. We got industries and energy, we got health, and we got consumer products. Now, the cool thing is I actually created these all on my own. These were not anything set in place. The cool thing is too, you can set any kind of sector that you want. So let's say you wanted companies like McDonald's and Wendy's and whatnot. You can make a food section if you really, really wanted to. I'm having a terrible time writing food here. But, these are just things that I decided that I personally wanted to have. These were the sectors I wanted to be involved in because even though this is not encompassing all the sectors in the market, I don't believe, this is just the things that I wanted to be involved with. So what we're going to do is kind of go into each one of these sectors or slices, however you want to kind of break this down, and we are going to look into these. Now, before we actually do that, if you are like, hey, this is really cool, I also use M1 Finance. I do have a ton of tutorials on my main channel. You can comment in this video and I'll link you guys up to those if you have any specific questions. But if you actually want to check out M1 Finance in general, I'll also have them in the links down below, which does help out support the channel so I can continue to provide these free videos for you guys. So what we're going to do is hop into our tech sector. Now, before we actually click on here, first and foremost, we can see here in our all, because we are in our all sector over here, we have a total gain of $346, and it is currently targeted for 26% of my portfolio, which means this is obviously a bulk of where my money's at and obviously what I'm invested in. So if we click in here, we're going to have this broken down once it changes. There we go. So you can see there is $4,197 in here. yeah, pretty huge chunk of my overall account. And you can kind of just see over time the value in just this sector alone. Now you can see here, I only have 3 different stocks in this account. So, or this slice, I should say. So we have Apple, Microsoft, and AT&T. And before anybody out there puts in the comments, I know AT&T is not technically a tech. They're more, like communications. I didn't want to have a whole separate sector just for AT&T, so I put them in here. They are much lower in their target in comparison to Microsoft and Apple, but just nonetheless, you can see that. Now, as far as their performances, let me clear that up. You can see here, Apple has done pretty well across the board. We're up $214. Microsoft, we are at $92.51. And then with AT&T, keeping in mind that this is also because of the dividends we've earned, I'm only down $1.45. If it wasn't for those earned dividends, I would actually be much lower because of the share price versus what I actually paid for it is a little bit lower. And I'll kind of click in here to show you guys what I mean. So just in case you don't know, this right here, which is the average share price, I have paid on average $29.96 per share, where the current price tag is $28.99. So if I sold today, I'm actually going to be effectively at a loss, but I plan on holding them. I don't really plan on buying more of AT&T. I got quite a few shares. You can see I got pretty much 28 shares, and I'll probably kind of stick to that for now. They're kind of my dividend driver. They obviously have a really high yield, which is 7%. I don't normally drive in for high yields early on, especially at my age. In case you guys are wondering, I'm around my early 30s. And so what this is really for is honestly just a little bit of capital to be able to reinvest into the companies that are going to be doing dividend increases, which is probably one of my favorite words. If you guys are familiar with the channel here, dividend increases is probably just the thing I love the most when it comes to investing for dividends long term. Now, if we look at Apple and Microsoft, like I said, these are obviously some of the biggest holdings because it's the biggest company or the biggest slice in my overall pie here. I do have 15 shares of Apple. This was, of course, after their split that they had a couple months ago. And then you can see my average share price is 102.12. The current price is 116. Don't worry, I'm not going to break down every stock like this. I just kind of want to show you guys, what I'm looking at and, kind of my overall breakdown and how I set all of this stuff up. So that's there. Obviously, we got Microsoft as well. And again, just because these are the biggest positions in my pie, I'm just going to break these ones individually. You can see I got 7.67 shares with an average share price of 202, and it's currently at 213. So obviously still a good time for me to purchase if I wanted to continue to build up more shares in this company. So let's go ahead and go back to the main portfolio, and we're going to take a look at our next sector right over here, which is going to be our growth. Now, obviously growth is not a real sector in the market. So this is something I just came up with. It is 15% as a target, but it's currently at 16%. So it's a little bit over, and you'll see why here in a second. Currently it is over $672 in gains right now if I obviously sold. So I'm going to go ahead and click in here. Ooh, really quick. Before we do this, let me jump into my holdings for a second because I promised those who like the unrealized gains. So I do apologize for that. So right over here, this is my unrealized gains on my portfolio thus far. $2,237, which is pretty much 14.8%. So the difference between this and the other dollar amount you saw earlier is this is just everything that I haven't realized yet as far as selling out of my stocks, and this does not include dividends. So just kind of something to keep in mind. So I apologize for those that were paying attention and wanting to know that information. So let's go back into this growth here. So you can see my total in the growth is $2,808, and we have 4 companies. We got Tesla, which you guys probably might have guessed. We got Amazon, we got Google, and we also have Facebook. So all these companies combined, obviously we see some pretty good growth. Surprisingly, Amazon right now is fairly low at only pretty much positive $23, which is about 7% from where I purchased them. So that just gives me more buying opportunity, honestly, in Amazon. So we'll kind of be looking into that. You can see Tesla right over here. We are up $529. And then we have Google right over here at $80 plus, and then Facebook up $38. Now, like I said, I'm not going to go into all of these companies all the time, but here's one really cool thing. M1 Finance and a lot of other companies are letting people do fractional shares, which is essentially getting to have ownership of companies in small bits and pieces based off of the dollar amount they can buy instead of the full share. And what I mean by this is currently Tesla trades for $574. So in a lot of other brokerages, to buy Tesla, you have to pay this full amount and you get one full share. And that can be really tough for a lot of people. One, because it's a high price point. And then two, that could be a large portion of your portfolio. I mean, for me, if I was just getting started, $500 would have been way too much for one stock. And that's all I had. It's a little too risky for me. But with M1 Finance and a lot of companies, you can do these fractional shares where you can see this is 2.03245. But I was buying, every time I was putting $5, $10, $20 into my portfolio, it was buying small dollar amounts. It was buying small shares into the actual stock of the company, which then eventually put me over like a share and two shares and hopefully over time even more on top of that. So for anybody that is, not having a lot of money but wants to get involved with like Tesla or Amazon or Google or a lot of these companies, you'll be able to see here as an example with Amazon, I only have 0.19 for shares, which is effectively almost 20% of one share. And that's only because I was putting in money over time instead of having to wait to pay in $3,185, which would honestly be way too much and not really good for my diversification. Plus, they don't really pay dividends. Obviously, none of these companies here pay dividends. I have them for the whole purpose of growth, because as much as I love dividends, I do also want some capital as well in case I want to sell those and put them into other companies. So be it. So next up here, we have our financials. You can see target is 11% and it's currently at 11.5. So it's a little higher. And a lot of this is actually because of how well it's been doing just over the last couple of weeks. So I'll show you here because we're on our alt tab. So if I go into our month or a quarter, let's go to the quarter here. So in the last quarter, we've gained over $439 in the financial sector, $10 of which was dividends, which is awesome. So this is huge, especially with the financial sector kind of doesn't perform as well as some others. And so I try not to keep this as too large of a percentage in my portfolio. I'm actually trying to bring it down because I think I had it upwards of like 15 or almost 20% at one point. So I've been lowering the percentage, but it's hard when the actual stock is constantly going up here. So in this area, we have Aflac, which right now has done pretty well. We're up $100 and almost $40 in the stock. We have Discover Financials, which we're up $196 on, which is great. We also have Ally right over here, which we're up $96. And then we got Visa, surprisingly, out of all four of these companies we have in here, is actually doing, oh shoot, these are actually in the quarters. But still, you can see just in the last quarter, these are doing well. So this is actually $7.62. Let me switch into my alt here. So that was my bad. So you can see not too much has changed between these first four. The Visa one has changed, obviously, just a little bit more too. Right over here at $34. But this stock hasn't done as well as, honestly, I've been hoping for. Either I didn't obviously get in at the right time, or it's just had not so great of the last couple of months, whatever the case may be. I'm still going to be in it for long term. I still see some great opportunities. Funny enough, for dividend investors, they see this and they're like, wow, Dennis, 0.57% yield is pretty low. Like, how are you going to get anything from that? Well, here's the really cool thing is there's a thing called Dividend Increases, which increases if a company wants to the amount that they're going to pay out in dividends. And sometimes that could be upwards of 10, maybe even 15% plus. And that is going to help increase your dividend yield on cost. And if you don't know what that means is if I buy the dividend right over here, like let's say one full share of Visa, I get 0.57% yield. But then if the next year they go up 10%, well, my yield now has gone up without having to buy anything else. So my yield on cost has actually moved up, while me not buying any more of the share is starting to make more money because that company increases their dividend, which is honestly, again, super, super cool. So actually, let me go into my dividend tracker here to show you guys. So if you guys don't know, this is trackyourdividend.com. I have them in the link if you guys want to check them out. This is one of my favorite things that they actually do. So this is my dividend yield, which is pretty much on par. I think 1.99% yield is where I'm kind of at. When you look at like where I actually, have it at, as far as if I put money in today, I'm getting an average of 2%. But the yield on cost that I actually have based off of when I bought the stock, what my average price was, and what the yields are on all my stocks combined in this portfolio, we're actually at 2.28%. So even though this doesn't look like a big change from, actually, let me clean this up, from this to this, that is actually pretty huge, and considering that I've only been investing in this portfolio for almost 2 years. So what this is really doing is I'm actually getting 0.29% more on my money than what I originally was expecting to pay, which was the 2%. Because even though I'm a dividend fan and really care about dividends, I don't want to look for that 4%, because a lot of companies that pay 4% don't have as great of dividend increases every year as some of the ones that maybe are around the 2 or 3%. So having the dividend yield be almost 2%, but the actual yield on cost that I personally have is 2.28. That is huge news for me, because that just means I'm going to be constantly increasing this if the companies I chose keep increasing those dividends, which is obviously what I pay attention for and also hope for as well. Real quick side note too, you can see my annual dividend expectations are about $345 every single year from just this portfolio. This is effectively if I don't buy any more stock into the company, which, if you guys know, obviously I'm investing every single week, so regardless, I'm going to be having this increase as well too. But that's exciting. Very, very exciting stuff. So let's keep going on here. So that was my financial sector here. And let's go ahead and jump into the next one, which is going to be retail. So our retail sector over here is 10% target, and it is exactly at 10%. So this one is doing pretty well, and we're not all. So let's go ahead and jump in here. So this sector has about $1,742 in here, and all time it has gained 367. This is honestly one of the main reasons I love M1 Finance, aside from just like kind of how everything works, is getting to see the value over time just on the sector that I'm currently in, and like how much it's grown right over here. Like all this information I get to see just in the retail sector, and that's to me really, really cool. And I can jump into like the 1 month, I can jump into the quarter, and again, all this information is just in this sector alone, not my overall portfolio. And the reason that's important is because it helps me gauge where certain sectors are. We talked about how like that financial sector earlier was doing really, really well. Would have been probably a little bit tougher to see the fact that all of my financial stocks were doing really well if they were all scattered across, one overall portfolio. So for me, this is what I like, because I can see, right now in the last month, this overall sector has done really well. Well, I can actually just do it here. About almost 5% gains on the money weighted return there. And you can see here, like, I have Home Depot, I have Costco, Ross, and Starbucks. And if I go to my All tab here, so we can see Home Depot is positive $50. We got Costco at $50 on Home Depot, yeah. And then Costco is positive 56, Ross is positive 76, and then Starbucks is positive 71. Out of all these, Ross is the only company currently not paying dividends. Hopefully that changes sooner rather than later. But yeah, so far this portfolio is looking pretty solid. If we go back to the 1 month, you can see that Home Depot is not doing as hot. This is what's really cool. This gives me the opportunity to say, okay, is it worth getting more into Home Depot temporarily because it is down in comparison to the rest of this portfolio or even this sector? Because if I'm buying into Ross, Ross is up almost 16% as of right now in the last month. So for me, this also helps me when it comes to decisions on where my money is going to go in my next deposit, whether I let M1 Finance do it or I manually purchase into stuff. All right, so next up here, we're going to have real estate. So with real estate, we are targeting for 9% and we are at 9.6. So the reason this one's actually higher than the target is because this is actually one that I bumped down from 10% to 9%. And the reason for that is because the real estate is starting to go back up a little bit overall. And when it does that, I prefer not to actually have, let me actually switch to my Alt tab here. I prefer not to have as much into real estate when it's doing very well, because real estate stocks are usually like up and down quite a bit more than regular stocks. So I try to get in when it's good and then get out, or not even get out. Sorry, I shouldn't say that. I actually try to stop buying more in when the stocks are really, really high. So for me, right over here, you're going to see 1678 is what I have in this account here. And then over the last overall time, I should say, currently I have Realty Income We are positive 76.56. I have NRZ. Shout out to anybody else who has NRZ. You guys let me know down in the comments. We are up $103.39, which is awesome. And I'll break that down here in a second even more. And we have DLR, which currently right now in my all-time, so as of holding this, I'm actually down on this stock. So we're down $13.83. So if I go in here, this is going to be a great example for anybody that's a little newer to this. And for anybody that already knows this, let me know if you guys are fans of DCA. So right now I own 2.903 shares of this company, and my average share price is $1 or $141.69. So currently the stock price is actually lower than what I normally pay per stock, which is $135.75. So if I buy into them right now, it's actually going to be less than what I typically pay, which means I'm going to dollar cost average, which also is known as DCA. So if you're somebody who believes in the company long term, even when they are down and they're actually lower than where you originally paid for them, like I did here, and you're still buying, your dollar cost averaging means that you're lowering the cost that you average pay on each stock that you own, and that just means more value for you when the stock starts going back up in value. Now, obviously, it's no guarantee that it goes back up, but if you believe in the company, that can be a huge thing. Because you could see here, I've been investing in this company for quite a long time. So for now, the fact that it's gone down just means more opportunity for me to buy. So that way, when it comes back up here, I get more value, more bang for my buck effectively. Because if I wait and buy back when it's at the top at, let's say, $140, well, I missed out on that $5 less that I could pay if I buy into it now. Pretty much what I like to do. So just kind of a heads up for you guys there. Now, if you guys are NRZ fans, just so we can kind of take a look here. So this was my average right over here, was $8.09. I have 55 shares in this company as well. So if they do keep bumping up their dividends back up to where they were before, this is going to be a healthy dividend paying stock. Right now they are at $9.71 as a price per share. So if I bought into this one as example, my average share will actually go up. So I have kind of stopped buying into this stock for now. If it dips again, or at least has a really bad day, maybe I'll buy more into them. But for now, I'm going to hold off because this is already going to be pretty nice dividend payouts every single quarter if they continue to bump up those dividend payouts. Because right now their dividend yield is already pretty high, but if the stock goes back up, we should be looking really pretty there. So let's go ahead and go into the next section over here. So next one over here, this is just Vanguard VOOG. So we're not going to really click on this one because everything is going to be out here. Just making sure we're at the all-time. So this one right over here is targeted for 10% of the portfolio. It is currently at 9.3, which means I have not been buying as much into this because it was actually 10% for a long time. In my all-time, I'm only up $34 or $37.41, so not a lot. So buying into them now will be pretty healthy if I, obviously expect this ETF to do very, very well. And again, like we talked about earlier, this is an ETF, which means it's a combination of a bunch of other stocks. This one actually has the top, I think it was like 250. Sometimes it's a little bit more than that or a little bit less, but it's around 250 stocks. The top 500 stocks in the S&P 500, which is one of the major ones that, are like indexed. And this kind of just keeps you very diversified. Now, some of the stocks that are in here are also in a lot of these other ones over here, so I can find them multiple times, but this helps keep me a little bit more balanced, and maybe over time this will go away from me, but as of right now, this is in the portfolio, and it's doing fairly well. Only it looks really low in comparison to the rest of these is because I switched over from one ETF to another, so when it did that, the actual gains is obviously going to be different. Now, next up is going to be our industries. So with our industries / energy, this is targeted for 9%, and we are currently at 8.6%. And let's go ahead and click in here and see what we're looking with. So we are looking at $1,500 in this portfolio. In my all-time, I'm up $134. And then we can see here, we have 3 stocks. We have Next Era Energy, ADP, and Lockheed Martin. So we can see Next Era Energy, 41% is the target on this one. So we're pretty close, and we're up about $11.35. This might seem lower in comparison is because this is actually somewhat of a newer stock, one of the newest stocks I've added in months, because I don't add a lot of companies into my portfolio anymore. I'm at 28 stocks, and I kind of plan on keeping it either at that or less. And then we have ADP right over here. This one is $86 total gains thus far. And we have Lockheed Martin, which is positive $7.94. This one right over here, Lockheed Martin actually had a pretty large downturn for a little while there. Let me go into was it the last month or last quarter? So it had a lot of ups and downs. You can kind of see it going up and down here. And so I was buying more into it as the stock was down, because again, I was dollar cost averaging or DCA to be able to get more shares at a better price point as well. So that's barely up, but that's okay because we're in this for the long term, guys. Like, I'm not in this for tomorrow or even next year. Like, I'm in this for 15, 20 years to earn dividends well beyond 1,000, because the goal is $1,000, if in case you don't know that. So 1K is like the main goal, but I do have smaller goals to get to $100 a month and then 1,000. But then honestly, we've done some calculations in the past year before where there's estimations where I can get up to 20,000 a month in dividends if I keep going with this and I stick with this for 20 plus years. And I can show you guys here in a little bit too. Oops, I actually jumped into the health sector without going over it on the outside here. So with our health sector here, our goal is 5%. We're at 5.2, so just a little bit over. So in our all tab, let me switch that over. We're up $76. Nothing too shabby with $905 as the total value in this sector. And then you can see here we got Johnson & Johnson. We're only up about $379 on this stock, so nothing too great. I'm a little sad about it so far, but again, long term is what we're all about in this portfolio. So we got AbbVie over here. We're up $51.96, so looking pretty good there. And we got Pfizer. This is $18.01. This would have looked a little bit better if I did this like 2 weeks ago, because it shot up like 10-15% in one single day. You can, I think, see it right over here. So right over there, you saw that like shoot up. And by the way, when that stock shot up for a little bit, I did not buy more into it just because I'm not going to buy something when it's on its like way up. I usually buy things when they're on their way down, as long as I see them long term as well too. So last one up here, you can see this is the consumer products. Goal is 5%. It's at 5.1, so it's kind of on par with everything. We have about $897 in this portfolio, about $153 in there. So we got Pepsi right over here at $31.12 as far as total gains dollar wise. We also have Hasbro at $62.07, and we got Procter and Gamble at $33.99. So this portfolio, this sector right over here, the consumer, is the lowest one in my pies. I don't know, like sometimes I'm like, oh, I really want to put more into like Procter and Gamble, sometimes more into Pepsi. Hasbro, I added a lot early on. You can see over here, like I added quite a bit, and then I ended up slowing down on how much I own. I only have 3 shares, so it's not like the most in the world. And the stock definitely jumped up quite a bit because I bought it at 73.36. Now it's up at 92.14 as I cut that off. But for me, I'm like, do I want to hold on to this company, or do I want to sell it and take the $62.07 that I've totally made in profit with the dividends and walk away, which would give me about $57 gain, in capital gains to be able to utilize in the rest of my portfolio. That's things that I typically try to think about. You guys make sure you hit that subscribe button down below to follow along, depending on what I decide to do with that fund, whether I hold it or not. So let's go into the holdings right over here. I mentioned earlier I have 28 positions total. I don't really like going over that. I think sometimes for me personally, and this is everybody's different, right? For me, having more than this, it's just really hard to keep track of all these companies, because when I invest into these like individual companies here, I want to make sure that I'm like paying attention to news articles or anything else going on with them, because if something changes, if they're going downhill long term, I want to make sure I get out of it when I can versus sticking to it just because I have, 50, 60, 70 stocks. At one point I did actually have, I think, close to 45, 50. And then I just slowly started getting rid of stocks that I just felt weren't going to hit my goals that I wanted to achieve long term. So you can see these stocks from like an outside perspective here from the different sectors. So it looks really nice. I kind of sometimes joke around when I click on my shares here. So obviously I got like NRZ and AT&T and Aflac and Apple towards the top as far as the number of shares. And then I have two companies left that are still under one full share. I'm not ashamed of this. I think this is a cool thing to kind of show people, and that like, hey, look, even for somebody with over 17,000, I don't even own a full share of of Amazon or of Google yet because they're so expensive, but I'm putting little bits at a time, and that gives me, small portions of a full share, and over time these are going to be over a full share, and I'll be able to kind of go through these and continue to add more. I barely own a share of Costco or Lockheed Martin, a little bit of Visa, and not too much craziness there. I have a little bit in Tesla, and that has done very, very well for me. We saw a plus $529. So it's just things like that the reason I love fractional shares is because it gives me this opportunity to buy in small increments. But yeah, going through this, one of the biggest things, like I talked about, was the fact that my yield on cost here, you can see from the Tracker Dividend website, right over here, is at 2.28%. So what I want to do is go to the Dividend Calculator here. And what we're going to do is we're going to start all of this up here. So we're at, where are we at exactly? 17,363. So let's jump here. So 17,363. Monthly contributions right now, we're around $800 to $1,000 a month. So I'm going to just try to go shoot for 1,000 here. And then our current annual dividend yield is 2.28%, as you saw there. And then our dividend growth rate. Now, it's on trackerdividend.com as well. Let me see if I can open up a new tab here. Have this load up here. And then we have it. Where was that at? If we go to our upcoming dividends, I think that's where it's at. Let me have this load up here in 1 second. And I'll show you guys here. Let me switch this over. So going back here before that loads up really quick. So we have, I'm going to put 20 years just so you guys can see this. And then our annual share growth, I'm going to just be a little conservative and just say like 12% annual growth on our stocks across the board. Thought that wasn't the page. And then I got to just see, that was the upcoming dividends. Future values, that's where it was. So I want to see where what our dividend growth rate is, because we talked about that a little bit. Dividend increases, what I call it, and then dividend growth is here. So right over here, this is going to show us based off of the companies I have and how they increase their dividends, the 5-year average growth rate for all the companies I have that do pay out dividends is 13.37%. So I get 13.37% more on my money every year in dividends on average across the board. So I'm going to plug that in here. So 13.37. Now this can obviously change over the course of 20 years, but that's kind of what we're going to be vigilant on, is making sure that we're paying attention to these things. So let's go ahead and kind of just break this down. So in the first year, with the dividends, we're earning $396, and then we have a total value by the end of this year about $17,759. Obviously, that's considering that today is year one, not including the last month of the year or something like that. And then you can see here, year two, we're going to earn approximately $824 in dividends, and then have a total value of our portfolio at $32,000. So that's a nice jump from one to the next. And then we can start skipping down here a little bit, and you can see here around year 8 or 9, I think this has kind of been on average when we do these calculations. Around year 8 or 9, we're going to be hitting that $12,000, which is, of course, equivalent to an average of $1,000 a month. And you can see where our portfolio is going to kind of sit at when it comes to having that. So it'll probably be somewhere in between these two numbers and hitting that, $12,000. But like, look at this. I mean, can you imagine getting, even in year 9, so 9 years from now, getting $14,500 in dividends every year, doing absolutely nothing else, just sitting there earning your money? Well, let's go ahead and keep scrolling down here. So if we keep scrolling down here, look at this. So in 20 years, if this stayed the course, I'm just going to show you this. This is $884,548 in dividends. Holy smokes. Let me bring up my calculator here. 884,548 divided by 12. So I was well over or well under when I came up with my estimate that in 20 years it'll be like 20,000. So this would be $73,712 per month. And then you can see the value of the portfolio would be about $4.4 million. And then you can see this is how much I would actually have made in total dividends, where this year alone in year 20 would be a large chunk of how much I'm earning in dividends alone. And that's what compounding interest does, by the way. If you're not familiar, like compound interest is just really effective for you. And it really does have a huge impact. Now, is this going to happen? I can't guarantee it, obviously. I don't know what's going to exactly happen. But if I stay the course, if I stay vigilant in, what kind of dividend growth rate I'm going to have, the annual, price or annual share price growth is going to be, how much I'm contributing is obviously going to be the biggest factor total. But like, let's even just say that this is at 10%. If we wanted to be more conservative, let's say this was at 10% for share prices. So let's go and just kind of see what this does. So I did that. So let's drop down all the way to the year 20. So if I was a little bit more conservative, we are going to be making $250,000 in dividends every single year. 250. So what is that over here? 834 divided by 12. Average $20,000 a month. So yeah, that's why my number was a little bit here, because I was being a little bit more conservative with my numbers versus what Tracker Dividend told me, and based off of what I kind of already knew on my dividend growth. $20,000 a month in 20 years. That's fantastic. And by the way, all this right over here, this M1 Finance account that I'm showing you guys, and I don't know why I circled the Tracker Dividend page, but all of the stuff that I'm showing you right here, this is just my taxable account. This is not including my Roth and my IRA. So I have an IRA and my wife has a Roth, both with Vanguard, and I do show this on the channel here as well too from time to time. And if you guys want to see that stuff, let me know down below. But this is just one portion of what I'm planning on doing. The reason this isn't a taxable account is because I want this money in my early 50s, so we can do some really fun, crazy things with $20,000 a month. Whether it's spending stuff on travel or doing some really cool stuff in the world to help other people, those are going to be the things we're going to have money to be able to do without having to worry about waiting for retirement. And then our retirement account is going to also be really well done and set up, because we're also being pretty aggressive with that one. Not necessarily focusing on the dividend yield yet. Just like this, we're focusing mainly on the growth of the principal of that money, and it's doing really, really well so far. So if you're somebody who's like, like I said, looking at something like this and you're like, whew, Dennis, like that looks really, really good. I want to do something like that. Get started today. Like I said, I'll have the link to my M1 stuff in the bottom. Supports out the channel, but it gets you started on investing into the market and investing for yourself, which is, I think, a really big thing. But then I want you to watch this next video right over here, because the more you keep watching on my portfolio and my journey, I think that's going to get you excited and interested in continuing your investing journey as well. My name is Dennis Trufan, and I will see you in that next video.